Hey everyone, it's Danielle Taylor with Keller Realty here on the beautiful Outer Banks. Please meet Jennifer Dixon from Goose Head Insurance. Give us the lowdown on some terms and terminology that we should probably know so that we know what we're talking about when you talk to us.
Right, so I kind of alluded to a few of these previously, and that was, the biggest one is wind-driven rain coverage. That is not included on your DP2 policy. So wind-driven rain is basically when the wind drives the rain into the home, but there's no exterior damage. So typically when you see this, it'll be the drywalls bubbling out towards you, but there's nothing showing why the rain came into the home, why the moisture is there. That's a big thing. If it gets up under the shingles or behind the siding, this is what creates that bubbling on the interior of the home. So wind-driven rain coverage is not covered under a DP2. That's why it's what I pretty much call the policy of last resort.
Okay.
So it's what we need. It's just to get coverage on a home, but there's extenuating circumstances that are preventing us from putting the broader coverage on the home.
Okay.
Then another thing is actual cash value versus replacement cost. We talked a little bit about this.
Yes.
That's the depreciation of you have a beautiful sofa here, and you might have paid $1,500 for it, but that was 5 years ago. So a claims adjuster is going to come in based off of wear, tear, and age. They're going to depreciate the value of that. In the traditional HO3, if we can find one that we can place the broadened home sharing endorsement on there, that's that short-term rental coverage on the home, then they're going to give you that replacement cost. They're going to say, okay, you spent $1,500 on that couch. It's a pretty high quality couch. So we're going to give you the money in today's market to replace such a high quality sofa. Let's see, then we have deductible. And typically on the Outer Banks, we were putting them at $2,500 for your all other perils. That's another thing. That's a different type of deductible. So when you say all other perils, we're thinking fire, busted water pipe, that liability claim from the slip and fall I discussed earlier. And then you have a separate wind deductible. So Hurricane Ian comes in, or a nor'easter or a tornado, anything like any wind event. And that's typically going to be 1% of the dwelling amount. So for easy numbers, $500,000 in coverage, $5,000 deductible.
Okay.
We have the excess and surplus market, which is very common for the Outer Banks. Our traditional nationwide, Progressive, Allstate, those big carriers, they don't insure very much here because of the risk. So we have to go to an excess and a surplus market to find coverage. The purchase price versus the rebuild value, pretty big out here. We're buying homes based on location, but that home that's maybe 900 square feet sitting right on the ocean might not really be worth the purchase point to rebuild. So we're going in and we're building that home up to the replacement cost of the home because we're not insuring the land.
Got it. I think that's a key thing for people too to recognize is, we're paying these prices for homes, but we're not insuring the land. I mean, the land is going to be there. Well, hopefully. But we're not, we're really insuring the home value. Okay.
Correct. A big thing out here also is polybutylene piping. We call that poly pipes for short. That is that gray piping that you'll see in some older homes. They're not really, and I believe we go into this a little bit later, it's not if it's going to bust, it's a when, so a lot of carriers really take a step back from that. And that's where you'll see those DP2 policies coming in. They're the policy
as an
of last
alternative.
resort. Correct.
Got it. Okay.
Correct. And then another big thing is the extra 25% of replacement value. I like to put that on every single one of my policies. You know it here on the Outer Banks when we have a hurricane and there's catastrophic loss. What happens to the cost of building materials and labor? They go up. So we like to have that as a buffer. So in the event of a total loss, you're not sitting high and dry because everything just increased overnight.
Okay, so those are some really good terms for us to think about when we're talking to you about our types of insurance coverage. Well, thank you so much. I really appreciate it. And everybody, we're going to have Jennifer's contact information in the link below, so make sure you reach out to her. I know she'd be happy to help.
Absolutely. Thank you for having me.